Hello, traders. It is Wednesday, July 10th, and it's time for our live event. Unfortunately, I'm going to be flying solo today. Harry has got COVID after going on vacation. So, Harry, I hope you get well soon. Market is floating higher on light volume. We're going to get into that. Over the course of the last few weeks, I've been urging you to really stick with day trading. Keep your bullish swing exposure to a minimum. We've been able to catch all of the moves intraday, and there are actually some good shorts that are setting up. And that really has been my focus over the course of the last 3 weeks. And I'm going to go over my previous picks. You can take a look at them. And my reason for focusing on the short side is that many of you are watching the market rally and you're going to be tempted to take a lot of bullish swing positions. And there are some warning signs that tell me that we're going to get a drop. And when that drop comes, it's going to be fast and furious. So instead of putting out more and more bullish picks, which you've had so many to choose from, I've really tried to focus on some shorts so that when we do get this little pullback, you'll be ready. You'll have some stocks that you can consider. And also, it forces you to look at both sides of the coin. And when you do that, you're much more in tune with what's actually happening in the overall market. So we're going to be getting into more market analysis during the course of this presentation. And so let's take a look at some of the recent picks that I've given you. Lyft. Actually, MU is one that I did in a live event, so I might as well go back to that. So MU, short up in here during a live event. You can see that bearish engulfing candle told us that we could expect some further weakness. And that's exactly what the stock has done. LYFT was a short that I featured in a Sunday video. You can see how that stock has continued to move lower. Starbucks was featured, I believe, in a live event a couple of weeks ago. Go back and watch all my videos, by the way. Please do not take my word as gospel or any other YouTube gurus for that matter. Go back and validate, verify everything. I give you real examples. I don't show you my P&L. Anybody can Photoshop that crap. I'm giving you the market analysis. I'm going through the systematic approach, and I'm giving you actual picks. That's how you can gauge how well the systematic approach works. And then in the next video, I started off just like this video with a review of my previous picks. So go through and do that. Starbucks was a short that I highlighted up in here. Love that short. I know CVS has also been on our short list. We are waiting for this market pullback. You can see how even though the market's been moving higher, and in the background, I'm going to have the D1 chart right now. Look at this market rally, okay? And look at what these stocks are doing. They are still drifting lower because they have that weakness. Now, AA was a long that I gave you a couple of weeks ago. And I gave it to you in the form of selling an out of the money put using the 39.50 strike price. And I brought in 75 cents for that. So you can see right now, I'm at about a break even. If I get assigned and I buy stock at 39.50, I actually use the 75 cents that I received in credit to offset that price. So 38.75 is where I would be long stock. I still have 3 days to get through. I like AA. Yes, it's pulled back a little bit, but my intention was to buy a stock that's still in a longer term uptrend and take advantage of some accelerated time premium decay. So if the stock pops back up above 39.50, I'm going to make a 10% return on that particular trade based on the margin that I have to put up. If I do get assigned on AA and I'm long stock, the option premiums are fairly expensive I don't see anything in the stock right now that's overly concerning. Yes, it's below the 50-day. Yes, it's below AVWAP-E, but it's still holding this horizontal support level here. So what I would probably do is sell some expensive out of the money call premiums, maybe the 39.50 strike price. The stock rallies back up, it'll get called away from me, and I'll make another nice gain on that. I'll be up by the put premium I sold and the call premium I sold. So I still like AA. I have absolutely no issue with this stock. Sunday, I highlighted Dell as a potential short, but we are waiting for a breakdown in the stock. I have this trend line that I drew. Until the stock is below that trend line, we don't even think about shorting it. And we need to see some type of market uh, topping that would come in the form of a bearish engulfing candle, a gap reversal off of the high. We need to see something, some signs that the market is ready to roll over before we start taking a trade in a stock like Dell. So, stock hasn't rallied, relative weakness still there. So, we'll see what happens with that. I also gave you a short on NVAX. I like that short. You can see this was on Sunday's video. Stock is continuing to tick lower. We have this low minus trend line that it's resting on right now. So stock ideally will start to pick up a little momentum in here on the downside. But again, this would be a good day trading short if you had some market weakness, and we would like to see a breakdown below that support level. I'm looking at a chart. I see an important price point, so I might as well drop a dang alert line. If that support is breached, I want to know about it. It's going to set me up with a great entry on a good short. So take the time, take the 2 seconds that it takes to set alerts. Very, very effective. I also gave you a long on Sunday that I liked, and that is AMD. So the video came out, let's see, in here. Yes, that has been a very nice long position. Still like AMD. Had a little bit of news today. They're acquiring an AI firm to ramp up their chip production and focus more on AI. Downward sloping trend line, breach to the upside above the 100-day moving average, gap up, nice follow through. This stock looks like it's going to continue higher, and the goal there is to be out before earnings. So we're getting into earnings season. I've had this question come up a few times. Pete, how do I get accurate earnings dates? I see one thing on Option Stalker Pro, I see another on Earnings Whisperer or other websites. Earnings announcements can change. The company can change right up to the very end. They can decide that they want to change their earnings release date. They don't do that very often, but they can. So it's important, especially once you get inside of that 1 week window when the company is going to be announcing earnings, they tend to update and they tend to confirm what that actual earnings release date is. So just because you might buy some calls that extend beyond the expected earnings release date, don't take that for gospel. Just because you sold a put spread before the earnings announcement that should expire before the earnings announcement, don't take that for gospel. Keep checking to make sure that those earnings release dates haven't been revised. So in any event, AMD is going to be announcing earnings on 8/6. I would expect to see the stock continue to move higher. We've still got a few weeks before that earnings announcement. So those are some of the recent picks that I've highlighted. And let's get on with some market analysis. So, why am I thinking that we could get a market dip in here? Well, you can see nice stacked long green candles, pretty much doji, 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 little tiny gaps up on extremely light volume. And so the tactic really over the course of the last few weeks, and I've been urging you to be cautious even back in here when we had this breakout here. This is a marginal new high right here. You can see we had the dip in April, then the market gets back. This is a good buying opportunity. We bought here, we bought here. When I saw this, I was like, okay, this is a good time to take gains on our longer term swing trades. We had a marginal new high, market barely could make that new high, and we had this bearish engulfing candle off of a new all-time high. Okay, time to take profits. But Pete, you missed this part of the move, and that's been a big move. That has been a big move. Absolutely. But we didn't miss anything. All we did was reduce our longer term swing exposure. And you can see in all of these cases, the screen candle here, guess what the market did? Opened on its low, closed on its high, opened on its low, closed on its high. So yeah, missed a little bit of a gap in here, but for the most part, day trading has been really decent in here because we've had opportunities on both sides. I'm finding longs and I'm finding shorts. That tells me that the market move higher is starting to get a little long in the tooth right now. And if we look at RSP, which is the equal weighted S&P 500, you can see there's no trend here. Well, what does that mean? That means that the big mega cap tech stocks, 7 stocks comprise 25% of the S&P 500. That's where the move is coming from. The other 493 stocks are not doing a whole lot of anything right now. They are sideways. Well, this is not a particularly healthy rally. You can also see that in QQQ, which is very tech heavy. That's where your rally is coming from. So if you're looking for longs right now, that's where you should be focused. AMD, NVIDIA, Apple, Google, Microsoft, all of those stocks are accounting for this market move. In fact, year to date, I believe those 7 mega cap tech companies are accounting for 60% of the S&P 500's gains. So very, very concentrated move. If you're looking to squeeze the last drop out of this move higher, those are the stocks that you're going to want to be in. So be very, very careful with your bullish swing trades because when the drop comes, it's going to be very, very fast. It will be like that. It'll be a 100-day S&P move on heavy volume or like that with instant follow through. So there won't be a lot of time to adjust or hem and haw. It's going to come very, very quickly. Most traders, they aren't able to adjust that fast. They see that type of move here and they don't heed the warning. Oh, it'll come back. It's okay. It was just one day. And then whoosh, they get the next leg lower and they get flushed out for big losses. Now, we had a similar move setting up last July. I warned you then as well. And we had this float higher. Everything looked beautiful. And then all of a sudden, you get this drop. And that was in July. So, and that is QQQ. I need to go into SPY. And there you're going to see a long bearish engulfing candle right there off of the high. I'm going to delete that line so it's not in the way. That is the type of move that you'll be looking for. Gap up, hard reversal, and then the market sells off very quickly. So that's one thing that you should be watching for, and also a spike in VXX. Everybody has VXX data, or you should have it. And you can see how VXX has continued to come down. When it starts to creep higher with the market being flat to slightly higher, that's when you have to pay very close attention. It doesn't always happen that way. So you can't just assume that I'm going to stay long until VXX starts to pop and then I'm going to get out of my long positions. Sometimes it doesn't happen. Sometimes you just get the drop, but you can see in here when the market was moving sideways, what was VXX doing? It was already moving higher before that candle. Same thing here. Before you had that candle, VXX is moving higher when you get these tiny compressed body candles. So this tells me we're probably going to start to see that pretty soon. And once we do, that'll be your warning sign. Now we do have a window of opportunity coming up, and that is going to be in about 3 weeks. Mega cap tech earnings coincide with the FOMC statement, and I believe the FOMC is going to say, listen, we're not ready to cut rates yet. The economy is strong. And then the market will get all nervous about it because nobody's minding the shop. Politicians leave DC. It's August. The Fed is in recess. They're not going to cut rates. The market's pricing in an 80% chance for a quarter point rate cut in September. So that also happened last year. Same type of setup. The market had priced in a rate cut and they didn't get one. And so then we had relatively heavy selling from August through October. So keep your swing trades light. See what the day has in store for you. Today, this is an M5 chart. We are grinding higher to a new all-time high. Every day, you're going to have a bid check when the market moves higher. So the programs are going to run. This is light volume. This is not a bunch of asset managers climbing aboard thinking that this is the last chance I'll ever have to buy this market rally. Absolutely not. They are not aggressive here. That's why the volume has been light. They do not feel like they are missing the next big opportunity. And so the programs run, and what they do when you get this gap up is they test to see if anyone is home. So you have an opportunity to evaluate how deep and how prolonged this market dip is every day. That gives you time to evaluate stocks with relative strength, or perhaps even look for some shorts. When I saw this gap up yesterday, I saw some wicks. I was fairly confident at a new all-time high that the market was not going to be able to advance. I looked for some shorts, and I did very well trading some shorts. Even had a short on today. We get this big market gap up, get this candle here. I'm not overly concerned. I shorted right in here. I saw a very weak stock, and that turned out to be a decent trade. But right now, we're starting to climb higher and higher. We've got this breakout. There is your downward sloping trend line. Breakout in here, 3 nice stacked candles. Now we have a new high of the day. You break out, and the market's able to hold that breakout, and now it's starting to get the follow through that we need. I'm going to put up my 10p signals, and that's something that all of you will be able to look forward to in coming months. So right now, yeah, I like the long side in here. I'm not overly excited about this move higher. Right now, how would I be day trading it? Well, we're going to be looking for some longs. So, but I'm also going to look for some shorts too. When you get a move like this and the market really is not doing anything dramatic, when you get these highs, then you watch for a double top, lower high, and then there's going to be an opportunity to do some shorting. So would I be gonzo trying to jump on this move right here? No, actually, I wouldn't. I need to see some type of dip. I need to see some type of selling pressure before I want to start jumping in on this. So let me answer a few questions. I'm going to take a look at what we've got here. I hope all of you are posting questions because that's the only thing that's going to keep today's session moving along. What do I think of McDonald's? I think McDonald's is a decent short. It is also a very choppy stock. And I say that because I've been watching it. So it's not the stock that you want to chase on a big move lower intraday. But what you want to do is you want to wait for failed bounces. So you get this little move higher in here. Okay, stock is in a longer term downtrend. Draw your upward sloping trend lines. And let's actually, I don't know how the 10p signal will have fared here, but we're going to find out in a minute. Okay. Well, there you've got a decent short that's set up and you have technical confirmation right there. You have a breakdown below that M15 upward sloping trend line. So you're short in there. You can cover in here. So right now, I wouldn't be short McDonald's, but I do like that D1 chart for shorting. It's been in a general downtrend. So how do I handle that? Well, let's use a 15-minute chart because a 5-minute chart might be a little bit too granular. I click GTC. I click on that bar right there. I click on that bar right there. And now I have an upward sloping trend line so that if McDonald's starts to pull back, wherever that might be, at 252 or whatever, I've got this upward sloping alert line telling me, hey, remember McDonald's, that stock that you wanted to short looks good on a longer term basis? Well, there's a failed bounce and a breakdown below a low plus alert line. Take a look, see if it's good. That's how I would be trading McDonald's right now. SBX, SBUX, Starbucks, good winner this morning. Yep, anything. So right now, anything that's food related is, in fact, food, leisure, apparel. Well, what do these things have in common? These are all consumer stocks. And the consumer right now is feeling a lot of pressure because inflation has been so high. Oh, wait, Pete, but inflation's not going up. It's starting to come down, which actually we've got the CPI tomorrow. So that's an important thing to mention. Yes, inflation has been coming down. So that means that the rate of price increases is starting to slow down. But that is a far cry from prices actually coming in and deflation. So if you compare what the prices are now versus where they were 2 years ago, they are way higher and they're not likely to come down. So that's putting a lot of pressure on consumers right now. They're not spending as much. So all those stocks, restaurant stocks, I can go right through the list. Those are going to be some of your best shorts right now, like SHAK, that chart. That's the kind of nice orderly price action you want when you're picking a short on a D1 basis. CMG Chipotle has had a nice big pullback. You can see that heavy selling in here. Another one, let's see, EAT is one that I shorted on the open this morning. I like that breakdown right there. And this morning I saw the stock testing the 50-day moving average and AVWAP-E. I didn't wait long to short that one. I just kind of nailed it right on the open here. I saw this bar here and I was trying to get as much off as I could. I bought some here, stock bounced. I shorted some up in here and I ended up covering the position in here. Let me put it, I can show you, I tried a couple of other trades, but I'm really keeping my trades to minimum right now. I'm just kind of dabbling around so that I can give members in the chat room something to look at. I did try and buy a Microsoft put spread. I tried to buy some MPC puts, just small size. But here's all my EAT trades. You can see I covered it at 38 cents. My average short on those was 42 cents. I think I made about $500. I didn't trade much. It was maybe 600 shares or so, mainly for illustrative purposes. So if I see a trade when I'm doing this presentation, I will take it. And look at this. We're getting a nice big rally. I believe Powell is testifying before Congress today, so that tends to be a lot of grandstanding. Chairman Powell, how can you just sit back and let inflation ruin our lives. It's that kind of thing that you hear. He said everything he has to say. We've had Fed speak left and right for the last few weeks. So uh, there's nothing new that we're hearing from the Fed. What will I be watching for here? Okay, this is still fairly light volume. So what am I watching for? This is climaxy. So we want to see if I see a long red candle that takes away that entire green candle, and if I see it quickly or even 5 minutes that takes away that open, then I'll have something to trade, and I'm going to just set an end of day alert right there, because if this long green candle is erased during this presentation, I will be taking some shorts. I promise you that. So anyway, yes, back to the McDonald's question. AMD, yeah, AMD, I like that one. That was on my Sunday video. And you can see that pop here, and the stock is not advanced. What does that mean? Is this bullish or bearish? I don't know. Is it, oh, how do I read this stuff anyway? Think about what buyers and sellers are doing. That's all you have to do. Just keep it really intuitive, really basic. So bye 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 bye. Oh my God, AMD is going to buy an AI company. Oh, that's great news for the company. This is wonderful. So stock runs up. It gets overextended. Stock pulls back and finds support. What does all this mean? It means this was overextended, but it was not all fluff. There is some merit to this. And now buyers are starting to chew away at some of that supply, because there are profit takers in here. There are people who bought AMD down in here, and they're happy to take gains up here. When you're long the stock at $150 and it's 183 in a matter of a week, okay, I'll take some of those gains. And so as that supply is being worked off, buyers start getting more aggressive. They wanted to buy more here, but they couldn't. So they had to buy more here. Now they can't buy it here anymore. Now they have to buy it here. Now they have to buy it here. That is how higher lows form. And that is why higher lows form. So right now you want to see it get through VWAP. And ideally it can even get through this area right here. So if we're watching it and we're thinking about getting long, put an alert line there. Now, the fact that the market has been moving higher and the stock has not been able to follow suit, that's relative weakness, Pete. See how the stock, see how the indicator is red? That means I don't want to buy it. Good gracious. This stock is up, okay, on the day. It just got ahead of itself. So its time will come. And if I see a breakout here, I'm going to be interested in taking that. I'm not crazy about getting long when the markets run up this far, this fast. What I'd be more interested in right now is, hey, the market's kind of choppy and it's moving around. What's not going up? Yeah, a nice market rally here. Show me a stock with relative weakness. We'll go into our relative weak 30 chart. Huh. Crowd looks weak. Would that be a good short? Tesla's treading water. Nike, nasty. So back on that consumer theme. Apparel, very, very weak. Nike, Lululemon. Consumers are not spending money. Yeah, breakdown below these low plus and low minus trend lines. Those are significant breakdowns. Those are significant trend lines. Yeah, this stock looks weak, and it has not been able to bounce with the market. Good short? You betcha. Now, we don't need to stick our head in the lion's mouth. We need to wait to make sure that this rally is all fluff. So that's what we've got going on there. Very easy to just look across the columns, look for as many red dots as you have, and that's going to tell you where the relative weakness is. CRWD, let's see what that D1 chart looks like. That's pretty bearish. Is it extremely bearish? No, but it tells me that this gap right in here probably going to fill. So you've got a breakdown below that open, which was horizontal support. You're in the gap now and you're below a VWAP-E. All right, so am I going to short this on a swing basis? No. Just looking for the market to pull back and to tell me that it's ready to go down. And when I get that, I want to see follow through selling in CRWD. If I have that, okay, well, then I can short some shares. What's driving these huge green candles? All program trading right now. There's no offer. This is a seller's boycott. Nobody is looking to sell stock here. So asset managers may not be buying, but they're not selling. So even on light volume, a small bid can drive the market higher. And you are opened up to all sorts of market manipulation. So if there was a huge purchaser of zero DTE call options and they're able to push the market a little bit higher, now all of a sudden this turns into a gamma type situation. And the reason that they can get away with it in light volume is because you don't have any natural sellers yet. Why would anybody be inclined to sell right now? Well, the reasons that you're inclined to sell would be that valuations have finally gotten so absolutely ridiculously rich that you start getting natural sellers in there. And when you get tiny bodied candles in the last leg of a rally, very, very compressed intraday action, that's also a sign that resistance is forming. But nobody's going to be selling today, right here, right now, simply on a valuation basis. More likely to come off of like a gap up, maybe tomorrow CPI comes up and you get this big thrust higher. CPI came in a little bit lighter than expected, maybe at 0.1% reading that's lighter than what they had looked for. And all of a sudden, you get all this buying that comes in on the open, and you get this fluffy fake gap up uh, on that type of move. Long red candle, long red candle, long red candle to instantly fill that gap on massive volume, then you know that's likely to be the gap reversal that we're looking for. I don't know that it's going to come on the CPI or PPI. I think that the market's kind of numb to all that information right now. And you still have mega cap tech earnings coming up. So I feel that there's a lot of optimism in how those tech earnings are going to come out. And we are not there yet. We will have earnings from the banks on Friday. JP Morgan, Bank of America. Let's take a look at the bank stocks because they've actually been relatively strong. JPM not moving higher, but BAC broke out to a new all-time high yesterday. It's not doing much today. You can see that strength in here. So I wouldn't be trading these this close to the earnings announcement, but you can see the breakout right there. Right now, what am I watching? Market's able to hold this high. That's good news. It's not retraced much of this long green candle. That's good news. But if we can't advance in the next 3 or 4 bars higher, then the weight is going to be heavier and heavier. This is like an 800-pound gorilla sitting on the chest of the market. Okay, you start getting into 6, 7 bars where we're not advancing, and that's a sign of resistance. So they could not work off all of that supply. And those offers are being replenished every time they try to lift the offer. There's more there. Jim, you're welcome. Thanking me for all the work and the analysis, even during the summer doldrums, which we are in the summer doldrums right now. What are my thoughts on BABA? I bought some Baidu yesterday. We might get a bullish explosion alert. We've had a lot of them coming up today, it seems like. And so Alibaba yesterday, I got long when I saw this liftoff, the fact that this green candle was preserved. So yeah, they tried to knock it down, but we found support at the open of that long green candle, and we found support above VWAP. So I bought it in here, sold it somewhere in here, had really nice gains on it. So it's a mover. So heavy volume. So right now we're in a low probability trading environment. It is critically important that whatever stock you pick, that it has heavy volume. What does that mean, heavy volume? That means that it's at least trading 120% above its average daily volume. I use 20-day, Harry uses 50-day. So you have to have heavy volume like this, or the stock won't have a chance to move higher. The market is doing this. Today, the market is moving higher. So yes, you do have a little bit of a market tailwind in here, but it's not something that you can count on when you put the trade on, because this is what the market did yesterday. This is what the market did the day before. You can't count on these nice, strong moves on any given day. But if you're in a long position and you happen to see that setting up, great. Now I know I can ride this trade for a little bit longer because the market is actually doing something good. It's made a new high for the day and it's making a new all-time high. As you start getting into long green candles like this is where you have the chance of seeing some heavier selling pressure because some of this fluff is going to be taken out. So you want to make sure that it's holding. Right now, if you're long stock, be very watchful of what happens in here. Those stocks that have relative strength are going to hold up very well. But if we lose this long green candle, that's your sign to take profits and get out of that trade, because that is likely a buying climax for today. And we are likely to see additional selling pressure on the backside. So just taking a look at some of your questions here. Trying to decide which is a better short, ADP or WMG. I can take a look at both, but let's see. I'm sorry. The symbol was ADP. All right, let's take a look at that D1. Everything has to start with a D1 chart. I don't like this at all. I hate this choppy type of crap. Be quite honest with you. Even when the stock does finally make a breakdown, these are mixed overlapping candles. Every single little drop, bounce, drop, bounce, drop, bounce. No, I don't like this one. Zoom out. It's going nowhere. I want something with some dang pace to it. So when you're talking about shorts, look at the stocks I highlighted, you know? I mean, this is a nice short because you get your failed bounce in here. You've got resistance at the 50-day. And once it sets the path lower, it's nice, steady drift lower and some acceleration also. Would I short it here? No. This is starting to get too far away from the EMA 8. And these are nice long red candles. And it's on horizontal support. It's on many longer term trend lines. This is where I would be looking to take gains, not enter a new position. If you get a long red candle through all this, still want to wait to make sure that that holds, because you'll often see that drop and then a bullish hammer right back through. So this is just getting a little bit overextended in here. So I want to catch the move. And as you saw in my videos, up here, okay, it's barely getting going. Now I get that acceleration and I got some nice profits in it. That's where I want to exit the trade. And let's see, not familiar with the other stock either. So I'm going to take a look at WMG. The other thing is you got to have some volume in these. This is another choppy, chunky one, you know? You're asking me to predict the flight of a bat. I don't know where it's going to go. Look at this thing. This is awful. I want to predict the flight of a flock of geese in a V formation. That's what I want to try and predict because I can tell you where those geese are going to be headed. So anytime you have this kind of choppy, crappy price action, run from this stock. No bueno. Okay, today maybe it's got a decent move. You can see a long red candle, but there's horizontal support right there. I wouldn't short that. Yeah, it's got some nice candles in here, but it's kind of a one day. You've got some heavy volume. If there's some kind of material news that came out on the company that's going to change its profitability long term, so I mean something other than a brokerage upgrade or downgrade, because those are crap. Those are trash. I'm more likely to fade those than I am to join them. But anyway, if there's something where the company comes out and they lower their guidance and they're talking about their profit margins being squeezed, whatever it is, okay, then you have reason to possibly take a short because longer term, the stock might continue to break down. But when you have choppy price action like this, it's just test support and then doink, right back in. Oh, test support, doink, right back in. And you drive yourself crazy. Oh my God, it looks so good. Now it looks like shit. What happened? Avoid these stocks and don't put yourself in that position. That's what you have to do. Might be at Traders with a Cause, and that is I'm not real familiar with that. I can tell you that I don't do a lot of travel. I don't venture out very much. Everything that I'm working on with regards to Option Stalker Pro, with being heavily involved in the chat room, doing recordings, live events, writing a book, is keeping me very, very busy. And I tend not to go out and do any kind of live events. I've done them, the personal live events. I've done them in the past, 20 years ago, and I did them at Traders Expos and other conferences. And it's a grind. Anything that takes me away from the office and trading right now and the projects I'm working on, I'm not very enthused about. But I'm always up for charity, so I'll take a look and perhaps I will make a contribution to them. Okay, I've got a question here. And if a stock is in a continuous decline, M5 reaching major support, D1 market would be favoring shorts. Would you in general recommend to wait for a pullback, a compression, set alerts, or to short the low of the day? And AMD. Sorry, I've got to take a look at what just happened in AMD. I had a trend line breach. I set it at this high right here, and I did it just as we were talking. So I like it. The market's making a new high. It's able to advance, as I had mentioned to you earlier. So let's go in and let's trade this. And let's see what we've got. I'm going to go out into August just because I know that that's going to span earnings. I'm going to go with regular expiration. I'm not going to do a lot here, but I'll put a trade on so we can watch it. Actually, I could go a little shorter term. I'll just go to this weekly option, take a look at what these options are going to be expensive, by the way. The 180s are, I want to go in the money. 180s are in the money by $4. So that is what I'm going to be interested in buying. And I'll be looking at doing 10 contracts, but I'm not going to put an order in just yet. And this little breakout right here, although it was nice, why did it happen? Why did it happen? That's why it happened. Right there. Stock is following the S&P 500. We had a nice long green candle that broke out to a new high, and that fueled a little breakout in the stock right here. What I'd like to see, and what would have been an even better setup, is if the market continued to pull back and I got this little breakout that would tell me that buyers are in there and it's not the market simply fueling the rally in the stock. There are legitimate buyers lining up in it. So right in here, and I do like the stock actually on a D1 basis. So I'm just looking for a little bit of a day trade in here. I want to see if any of this long green candle retraces, but this is a good sign that this long green candle was able to hold and that they're right back at it. This is also feeling a little bit climaxy to me. So it feels like there's a little bit of a buying climax taking place. So how do I approach this? What do I do? Oh my God, I got a trade queued up. Well, I'm going to set, and I already breached that level. So set alert right here. See if the stock can get through that. I don't need to rush into anything right now. This is a very powerful move. I'm thinking it's got to be related to something Powell is saying during the testimony because there's no other reason for it. And the volume is not that heavy. This was okay right in here. That was decent little breakout on volume right here, but there's not a lot of volume flowing in right here. So I am still more interested just from a day trading standpoint of any kind of short that I might be able to pick up. So I got an alert set on AMD. And so if I would have gone in and I would have chased those options at $8, right now they're 775, 785. Oh shit, here we go again. Stock was breaking out. Stock looked great. D1 looks great. I'm going to buy them. Oh no. Measure twice, cut once. Ask yourself what's going on. Where did this bar come from? Why is that a good breakout? What was the market doing? Tick for tick. Watch what the market is doing. You are trading the market. You're simply trying to find the fastest horse. And if I'm looking for a fast horse, I can go into any one of our searches and probably find better longs right now. And I can just flip through some of these and take a look at some charts and see what they're doing. MU, NVIDIA, grind, 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 grind. Tiny bodied candles means to me that there is some resistance here. Not seeing any long, tall green candles, any blow-offs in here. Just a gradual float higher with the market. So as the market moves higher, these programs have to go out and buy stocks that are in the index. Apple not participating. And this is probably a decent short on Apple. I'll tell you right now, long green candle, new high of the day. More green candles for the market. Stock not participating. In fact, stock ready to take out VWAP here. Okay, you could probably buy some Apple puts and look at that on decent volume. Okay. Low one rolling over. So, um, trying to see if there's anything that, I'm just looking for green dots. Oh, this is choppy as heck. Avoid that. I'm going to get back to some questions. We're going to keep watching the market. Let me find a good short, for crying out loud. If this thing does roll over, I want to short something. All right, so let's go in and take a look at some shorts, and then I'll get to some of your questions. And just going to be looking. Crowd we already identified. Okay, now that's got an upward sloping trend line right here. If we draw it, I just want to know when it's breached. AA, Lulu, Lyft has been weak. BBY. BBY would be another consumer stock. And you can see that it has been relatively weak, but it's bounced a little bit. So it's okay as long as we can take this out on a swing basis. I'd be okay with it in here. Just taking a look, see what we got out there. See if there's anything really nice that's setting up. Already has weakness today. PayPal. I'm just looking at D1 charts right now. Nike, that is nasty, but that stock also does have a tendency to bounce. I'm going to go into Red Royal Flush here. Dash. Now, choppy, nice little poke through here, but good likelihood of reversing. I would prefer to find something that's up at the high that's starting to roll over and is breaking some technical support. I don't know if I'll find it. Too bad. Fairly choppy stock. Doesn't always have a lot of follow through, but that's a pretty nice trend line in there. Breach to the downside. Resistance at the 200-day moving average. Can't get through it. Rolling over. Got a sell signal here. That's nice. Yes, this could be a decent short. It's not going to go anywhere fast. We can see that choppy as heck, back and forth. Got a nice gradual drift lower. So let me take a look at, I noticed yesterday that Microsoft had a bearish engulfing candle, pretty close to a bearish engulfing candle, but it's able to recover very quickly today. So you needed to see follow through. That would tell you that the stock's in trouble. So Apple, I'm going to set an alert on Apple. Am I long-term bearish on Apple? No, I am not. Just stock's looking a little bit toppy in here. Okay, you can see this little breakdown in here coming on decent volume. This would be a pretty decent little short for us for a day trade. I can't say that enough because somebody a week or two from now is going to go, okay, that Apple short, I got my ass handed to me. It was a day trade in and out. you know, these are the signs that you want to watch for, though. You get these long green candles that are easily retraced on good volume, and especially even if the stock is making an all-time high, you're day trading it. You can do anything day trading. That's the liberating, beautiful thing about day trading is when you get really good at it, you can trade long or short. You can even trade against the D1. I'm not advocating that for 99.9% of you, but when you become a professional trader and you know what to look for, you have confidence knowing that those patterns are taking place when the market is going up and the stock should also be going up, but it's not. There are some sellers, and we see that in the price action and the volume. So right now, Apple looks pretty interesting to me. All of these are going to be in longer term downtrends. So they're not going to be reversing very hard. I'm going to run a search. I'm also going to look at a search that I like, which is bearish SMA cross. So all of these stocks have crossed a major moving average today. They were above it yesterday. They are below it today. That's the 50-day. Above it yesterday, below it today. OKTA. Okay. Let's set an alert right there. See how easy? Fast. BTU. Nice, steady selling pressure. Gap. Filling. Below 50-day, below AVWAP. Pretty decent, not a lot of volume. How about today? Just one little volume spike there. So not that compelling. But we're going to keep on looking. Look at heavy selling. It's harder to find good shorts right now, although I've seen some surfacing. Coin, no breakdown there. I need to see some type of technical breakdown for me to want to short it. DVN. Okay, there we've got a little breakdown right there. We've got rejection off of the breakdown below the 200-day moving average, rejected there. CMG, bearish, 10p signal. Okay, food stocks bounced a little bit. What do you do with that? Well, click here, click there. Let's see if we get another breakdown. Click here, click here. All right, we want to see this first. Mark it first. Got to give up that long green candle open, okay? Then, and only then, do I have something to work with. I need to have that market tailwind. Again, I am trading the market, but I am trading it using the weakest or strongest stock. That's what we're doing. All right, so we're almost an hour in, so I've got to answer some more of your questions. I hope a trade sets up in here. And we can take a look at AMD now with the market continuing to climb higher. It's probably, no, it hasn't recovered yet. So, gee, good thing I wait. Good thing that I set alerts and don't place orders. And we've got the market continuing to push higher in here. John, you've got a question. How does upcoming 10p differ from the current 10p? Current version still be available? Yes, current version will be available. And this is the 10p indicator here. And yes, this will still be available. The difference is that I've been able to separate out components and to gauge and measure them differently so that they actually generate buy and sell signals. And you'll see that reflected in the chart. Sell, buy, sell. Got to be careful on an M5 basis because you wouldn't really be taking a signal at the end of the day if you're day trading, and that's what M5 is really for. So if you're looking for longer term type swing signals and overnight signals, then you're going to want to go with something that's not as vulnerable to these gaps up. So for instance, like an H1 would be much more viable for swing traders. And then your concept here is that you trade in accordance with what that longer term signal is telling me. So you can favor your longs in here for day trading and shorter term overnight swings. In here, you've got to be careful. You know, you still have a strong market uptrend, so you wouldn't necessarily be short there. You'd be favoring the long side. So there's your next entry point for a long. Okay, nothing going. You know, trim your long exposure, wait for the next long, then you're long in here and you get your nice lift off. So intraday basis, yes, you can use this. CMG, price breached below. Oh, we got a trade setting up here. All right, so the uptrend line was breached. I still don't have anything to trade off with the market though. So I'm going to just keep looking and look at this thing march higher. And what you do get in here also is you're going to get some people shorting this. They start to see some of this retracement and they short in here. Uh-oh, now they got to cover. And then they short again. Uh-oh, now I got to cover. So yeah, this is nice little move in here, but I'm very suspicious of it. So that's the difference. 1OP, I've had to go in and reconstruct it so that it would give me actual buy and sell signals with very few divergences. So I'm still testing it. I'm testing how we might use this. I've got beta testers also looking at it. I'm excited about this release. It's going to come probably in a few weeks or so. And it is a search variable that you can use. So in general, how far past the earnings date should the expiry for a credit spread be placed? Okay, a credit spread should always be placed before the earnings announcement, not after, before the earnings announcement. We want that slate wiped clean before earnings. We never hold over earnings, okay? If you're a long-term investor and your time horizon is 3 months, 6 months, or more out, fine. Then you're willing to accept the reactions to earnings announcements. We are traders. Everything we do is inside of 3 months. We avoid earnings announcements and holding over that earnings announcement like the plague. That is a binary event. It's 50-50. We don't want to do that trade because we can hit 75, 80, 90% if we stick to the system. We day trade, we short-term swing trade. Why would I accept a 50-50 proposition when I can hit 75, 85% the rest of the time? I wouldn't. Credit spreads must expire before the earnings announcement. If I am buying premium, I am long calls, I am long puts, then I absolutely want to have those options expire after the earnings announcement. I have no intention of holding them during and over that announcement itself, but as that earnings date draws closer, the options will expand with option implied volatility. So I will benefit from that. If I'm buying deep in the money calls or puts, they don't have a lot of time premium in them by nature. And any time premium that I might lose will be offset by that increase in option implied volatility. So, very important to understand that concept. What do I think of MMM? Take a look at it. A lot of these cyclical stocks are very choppy also, like Caterpillar, MMM. MMM's going nowhere fast. I mean, what do I think of it? I don't know. It's like watching paint dry. There's nothing going on there. Stock doesn't have a pulse. Set an alert. Here, if you're hell bent to trade it, okay, and set an alert here. Set a downward sloping trend line. That alert goes off, or that alert goes off on heavy volume. Now you got something to look at. You got something to trade. In here, this is just a mishmash of activity. There's nothing going on with that stock. All right, we're going to have to conclude here pretty quick. I got to find a trade, dang it. Always do a trade. So I'm going to focus on that. Let's see. I think I've exhausted a lot of your questions too. So, was there a new pick? Yes, there was a new pick. Well, there hasn't been a new pick today. So that's what I'm going to be working on finding right now. Oh boy, look at this market rally go here. And let's take a look and see. Again, before we conclude, what we're looking for here is on the last leg of this rally, and we're getting through a high plus trend line. I'm looking for a long green candle, and then a bearish engulfing candle the day after. It could even be 2 days worth of selling that take away that long green candle. Another possible pattern is like this, where you get a gap up, and then all day we sell, and we sell hard, heavy, heavy volume. You get that, that's going to tell you that buyers and sellers are in equilibrium, and that there's going to be a lot more intraday volatility. And that is also when the risk of having more sustained selling will come. Could we melt up for the next 2-3 weeks heading into earnings season? Sure, absolutely. There's nothing really to hold the market back right now. So the best thing for me personally is day trade. Wait for that early bid check. Wait for that support to be confirmed. There's your bid check below VWAP. Right in there. Okay. Starting to get a crossover in 1OP. Yeah, this is where you want to be long. Will it explode like it did today? Sometimes it will, and then you'll benefit from it. Sometimes you're going to see that horizontal price movement. So you want to make sure when you're buying a breakout like this that you get follow through. Well, they tried to smack it down right there, and they were unsuccessful. And we recaptured that long red candle in here. This is where I would start feeling pretty good about joining that move. So you get this long green candle. They tried to smack it down. Would I be adding in here? I don't have the gall to do that right now, not with everything that I've seen in the market. So I'm looking for some type of climax today. And this is getting pretty parabolic in here. So I would be looking for one of those long red candles. And if you see it, it's time to take gains on your long positions. So I'm going to take a look and see what I can find on the short side. I might run a custom search here. So let's look for a stock that is $20 or greater in value. I haven't run this search, so I have no idea what's going to come up in it. Let's get some decent option liquidity in here. And let's be on a bearish signal. And let's do the same here. I know that some of these stocks that are going to come up. Actually, I'm going to show you a good exercise. Let's look for just this 1OP signal across very short time frames with heavy volume. I mentioned to you how important heavy volume is. So let's make sure that we have it at least on a 30-minute basis. So this is just recently, okay? This doesn't mean the D1 chart's going to be good for us. I could also use RVOL, but I'm more interested in what is crapping out right now with the market moving higher. So let's take a look. And I actually did have an alert come up earlier today. COP, so this is upward sloping trend line, breach to the downside, drifting lower when the market's higher, bearish trend in here, that's not bad. CPNG, nothing, it's trapped in a range. No, thank you. It might be weak today. Oh, what do we got here? Hey, that's a nice little breakdown. Now this is a choppy stock. So I have to temper my excitement on this one, but I like that. Earnings are 725. So I don't have much time to work with here, but that is a really nice breakdown. And the stock is continuing to go lower. And if I get a market breakdown, see you later. MA is a nice looking short. I am liking this right now. All right. So what are we going to do with this information? I'm going to take a look at the option chains. I'm going to see what those option premiums look like. And the 25th is when we have the earnings announcement. So what can I get by selling? And first of all, let's take a look at what those option premiums might look like. You can see here Historical option applied volatility is at 17. Dirt cheap options. Cheap, 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 cheap. That means I should favor a buying strategy. Well, what do we know? That's an earnings announcement there, and you get a gap down. But you can see gap down below horizontal support. What did the stock do? Rally, 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 rally. I don't like that. When it breaks down, I want it to stay down. So I can expect these types of bounces in the underlying stock. And if I go back and take a look, even that breakdown looks great. Hey, what happened? Look, it broke through all that good stuff. Right back up again. So head fake. You got to be careful with that. But this stock has had, as opposed to here, where you're in an uptrend, now we are in a downtrend. So I feel that this move is probably more legitimate, and it's come on decent volume. And let's take a look at the news. Oh, it was a Bank of America downgrade. Okay, so they downgraded both Visa and MasterCard. So we can look at Visa. And there you can see this stock has just fallen and now it's just sitting. So it has not had the same follow through, but it does have a similar type of chart pattern. Well, it doesn't really excite me, not as much as it did initially, because these analyst downgrades, these brokerage analysts, it's crazy. These guys are a day late and a dollar short. I think there's still an analyst who's short Tesla at like $10. It's crazy. And then he finally adjusted his price target up to like $20 or something ridiculous. So these guys are not the guys that you want to be following. If Visa and MasterCard had come out and said, hey, we're giving guidance and we see that the guidance for this quarter is going to come in light, that I would get behind 100%. A brokerage downgrade, no. I don't care what these guys say. But right now it does have some pretty good downward momentum. So I like that. If I get this little market decline in here, would I be interested? You can see how I found that stock. So I'm going to look at one more because it had come up on a search. And I tried to get short earlier today. Compression, 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 sells off, bounce back, sells off, bounce back. It's kind of the same thing, but this is a pretty decent little crackdown. And this is MPC, Marathon Petroleum. So you're starting to see refining margins come in. Oof, what am I going to do? So, first of all, market. If you're trading futures, would you short this move right here? Hell no. First of all, you got to take out some major support. But what's likely to happen is you're going to get a fair number of red candles in here, and they'll be fairly sizable. And then the market's going to bounce after. How do I know that? How the hell can you be so sure? Because this strength tells me that there are buyers. Okay. So when those sellers finally come in, they're going to knock the market down a little bit. These guys who've been waiting for a dip are going to buy that pullback. They're going to buy it and they're going to fuel the market higher, and they're going to try and make a new high for the day because they've been waiting for that dip. But the sellers are there waiting to smack it down. And then after a powerful move like this, you want to wait for that double top, lower high, and then when you have that, you can take your short with confidence. Why? Because there are sellers at the high, so your risk is limited. There is resistance there. That's why we have a double top, lower high. The guys that wanted to short up here start thinking, I'm not going to get a chance to short up here. There's too much selling pressure, so I'll be happy to sell it here or here or here. And that's when you start seeing the market crown and you start seeing that heavier selling pressure. So only if I see a double top lower high would I consider shorting. And then I'd probably be looking to take profits somewhere around VWAP because it probably will be tested. I don't know if I'm going to be able to find a decent trade here, so I'm just going to keep looking. On the long side, I'd be able to find a bunch of them. I'm pretty confident with that. But I'd rather give you something on the short side. Day traders have higher winning profits per trade, blah, blah, blah. I don't know. It varies from trader to trader. I'll tell you that the guys who are on positions, they may have a lower win rate, but they're going to make up for it with much greater profits. So when they get in, and what is win rate, and depending on market conditions, I can be in and out and in and out. I'm kind of jousting and trying to get, a feel for where the market might be going. I want to keep my risk fairly light. And so my win rate might not be 85%, maybe it's 70 or 75%, but my losers are tiny, they're dime, a nickel, whatever. I'm trying to get in and I'm trying to get into a position where the stock is immediately moving my way. And then once I get that set up and once I get the confirmation from the market and the stock, and now everything is starting to click for me, I'll add. And so now I build a bigger position. And when things fall apart, then I'm going to make a lot more money. But if I look at simply my win rate or my percentage of winners, it's going to be lower than another trader who might be more in a scalping mode where they're in, they take 20 cents, they're in, they take 15 cents, they're in, they take a nickel, they're in, they lose a nickel. Okay, there they might have a very high win rate, but their profit per trade is not as high. It's really more of a trading style and trading preference. I'm not a level 2 trader. I'm looking for bigger moves. I'm looking for 40, 50 cent moves, $1, $2 moves. And I'm not interested in just in and out, in and out, in and out. I'm going to give some advice to somebody who is frustrated by pattern day trading. I can't because it's a rule. It's all I can tell you is to keep making money consistently and start small and build your account and get up above that pattern day trading requirement. And then you can consider doing a lot more intraday trading. So focus a little bit more on swing trades when you don't have as much capital. The longer term your perspective, the greater your likelihood of being right. How can that possibly be? Well, just think of the investor who dollar cost averages. They don't worry about the market every day. They just keep plowing money in, regardless of where the market is, knowing that eventually the market is going to go higher and they will be right. So you've got a lot more cushion if you're an investor to weather some of those adverse moves than you do when you're day trading. When you're day trading, you're typically very leveraged and you need to be right all the time. So if you can consistently be right on a swing trading basis, you'll build your account that way, and your bigger gains are going to come overnight. So focus on becoming a good swing trader, build your account, don't be worried about day trading. And then eventually, as you start getting closer to having what you need to cover that PDT, then you can start coming in on your time horizon and doing a little bit more day trading. You can do day trading on a paper trading basis also, just to make sure that you're honing your skills. So when you're a day trader, you got to be spot on. It's about precision. It's about great entry. It's about not holding bags for any long periods of time. And you can see I've been patient in here. I'm waiting for a move right here. If I had to do a trade, if I break down below these long green candles in here, I'm going to be very anxious to take a short on S&P futures in here. But what I will do is I'm not going to bite on that first little drop, as just like I told you. These buyers are there. And you might look really good in here, but they're going to be back and they're going to try and drive this thing up. And then a second double top, lower high with 1OP rising and cresting and not able to get back to the high of the day. Yeah, I would short that. I would short S&P futures. I'd rather short a stock though, but I can't seem to find one right now. So I can give you a lot of stocks on the long side. All I got to do is go through all the mega cap stocks and take a look. Nvidia is probably as good as any. I already gave you AMD last week, and that looked fine. And there's Nvidia. I mean, Nvidia might as well be my pick of the day. Nvidia, Google, Apple, Meta. I mean, all those mega cap tech companies. That's where your strength is currently coming from. Okay. I don't think I'm going to be able to find one. Here's what I'm going to do. I am going to conclude this because we're at like an hour and 20 mark right now. And what I'm going to do is in my comments for this live event, I'm going to look for that short, and then I'm going to post it to my comments that are in a live event. SLB, that's not bad. That is not a bad short. And kind of looking for a swing trading short as well. It's in the energy sector. What do I like about it? Why do I think that's such a good? Oh, it looks pretty choppy to me. So you get this nice downward sloping trend. You get this bounce. Can't get through the 50-day moving average. It tries. Whap, 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 whap. Now it's below AV WAP E, and it's starting to roll over. So yeah, I think SLB is going to be a decent short. And let's take a look at the option implied volatilities are at 34, which is not really here or there. You could go long premium. You could buy in the money put options that are trading with a delta of 0.7, or you could look to sell out of the money calls on this as well. But you don't have a lot of time because the earnings are coming up in a little more than a week. So you're going to be in this trade and you're going to be out of this trade pretty quickly. So let's take a look at where those options might be. I had mentioned to you, we want to be past 719. Okay, so we've got to get past that expiration. Let's take a look and see where they're at. $47s are. Okay, $47 puts that span that earnings date are currently, let's call it 240, and those are in the money by $2, so you're paying about 40 cents over. That's not too bad. And you've got a chance for the stock to go down to about, let's call it 42.80. So you've got about $2 worth of potential movement in that underlying. Yeah, I like that. See, we're starting to roll over in here. So I'll do that trade. I don't want to do it big. Well, I'll do 5 contracts just to say that I put a trade on and to give you a price so you can look at it. And I think I might try 43. Let's see if we can get that done. Stock's not going anywhere, so I should be able to get filled. I did get filled at that price. All right, so we got 5 of the July 26, $47 puts, 243. Stock is breaking down. Market should be breaking down in here. I am going to be watching for an S&P short. I think that MA also sets up pretty well today for a short. If you want to see some follow through on the downside right in here, but this is a brokerage downgrade, and that is why the stock is breaking below support. I'm not a big fan of upgrades and downgrades, so I would need to see this breakdown hold. No bounces right back above it. And then I would be more than happy to take a short, knowing that it's not just the downgrade by the brokerage firm. There are some natural sellers. So that's what you should watch for. Good luck with your trading, everybody. By the way, Will helps me orchestrate these live events, and he's going to be taking some much deserved time off next week. So I'm not going to do a live event recording next Wednesday, but I will try to do a recording before the open next Wednesday. So make sure you come back and check the website, and I'll try and have some longs and shorts for you to consider for trading during the day, since I won't be doing a live event. And I plan on continuing to do my Sunday events. So right in here, you're watching for this pullback. Nice and deep would be good, with some nice long red candles, and then a bounce that can't get back to the high of the day, and that rolls over. That is shortable. Trade well. See you Sunday.